Just imagine turning your 10,000 rupees into 1 lakh in just these 5 years.
More than 90% of its sales in India.
Let's discuss why we are seeing this 1000% kind of returns.
Any guesses?
Cheers and welcome. The blazing sun is upon us and we are into hot summers. So we are diving into a stock that's been making waves in this, delivering about 1000% return over the last 5 years. Just imagine turning your 10,000 rupees into 1 lakh in just these 5 years.
Absolutely. And guess what? The company we are about to discuss is right on our table. Any guesses? Hint, it's not just Pepsi, it's the powerhouse behind Pepsi, Varun Beverages, which does contract manufacturing for PepsiCo, accounting for more than 90% of its sales in India. What this means is PepsiCo provides concentrate or secret recipe for popular brands like Pepsi, Tropicana, and to Varun Beverage basically, while Varun Beverages manufactures it and distributes it.
But Varsha, let's discuss why we are seeing this 1000% kind of returns. So the main addition is the value-added products into the high growth and high margin segments. Like take the energy market for example. Just a little bit of sting on this. This is believed to be growing in double digits and also supporting other brands, for example. Just an example over here, Sting has added over 4 lakh dealers within whom they had no association before. After this, they started carrying the brands for other products as well. One of the main strategy for Sting also was that it has been introduced with a price mark of about 20 in India.
Did you know the Sting was first launched in Vietnam, but after seeing the success of Sting over there, the company brought this product in India, which is a much larger market with higher growth opportunities. Again, what is interesting here is this is made for the masses and not only to sports segment, which is normally the perception. And if you look at the other brands, like Red Bull or Monster, they still are priced about ₹100 mark.
Let's even look at the kind of expansion that the company has made. About 913 million of total sales volume in just calendar year 2023 itself. The strong growth in the Indian business is led by the opening of new distribution networks in underpenetrated places like the West and South regions, which they're doing by expanding their manufacturing facility reach over there.
Also, interesting thing is they backward integrated their plants, meaning they set up facilities to produce things like bottle caps, plastic wraps and more, giving company more cost advantages. This is also reflected in their PAT margins, which went from 6% to 13% over the last 5 years. Just a small note on this, after the international operations started stabilizing, a favorable tax structure also aided in boosting this profit growth.
But now let's look at the growth picture, or rather the big story going forward for the business. Looking ahead, their growth drivers continue to remain on the energy drinks and the carbonated soft drink segments. However, they're now expanding into value-added segments like the dairy segment, which includes brands like Cream Bell, Tropicana and Gatorade also going forward. In fact, you know what, the verticals that we've just talked about, they've added about production capacity of over 200% over the calendar year 2023.
And internationally also they've entered South Africa and ventured into snacks like Lay's and Doritos in Morocco. Let's see how this pans out for the company. That's a deep dive into Varun Beverages, a company with a refreshing strategy and exciting growth prospects.
Stay tuned for more such updates and insights on NDTV Profit.